ירון, שומע אותי? שומע אותי?
אז תתחילו. הלו?
כן, שומע אותי?
כן, שומע מצוין.
שומע מצוין?
כן, כולם שומעים גם מצוין.
אה, כן, אני בלי אוזניות.
אוקיי, שומעים מצוין.
תפתח לי גם את הוידאו.
Good evening, Ben.
Good evening, ירון.
How are you today?
Hey, hello to everyone. Welcome to our monthly webinar. We're happy to see a lot of people here again. And so we're going to start in a few minutes. We're going to talk about the market, interesting month that we had in last August. And we're going to talk about a little bit on the future and then September, what's going to happen in the markets. We're going to see what the algorithm thinks about the markets. Um, and as always, in the end of the webinar, we're going to see the forecast, the indices forecast, and the sector forecast for the market. So it's worth waiting up until the end of the webinar. Feel free to ask us questions through the Q&A. We'll try to answer most of it by the end of the webinar. And 2 more minutes, and we're going to start, but I see some people are still joining us. So 2 minutes, and I'm going to start the webinar. Hey, hello to everyone that the new people that joined us. We're going to start the webinar in a few seconds. We got a really interesting webinar today. We're going to talk about the markets. We're going to talk about last August. We're going to talk about what's going to happen in September, where the S&P 500 is going to go, where the indices are going to go, sectors that the algorithm thinks are going to be the best for the next month. With us is Yaron Golager, the CEO of Rhino First, and we're going to start in 1 minute. If you have any question during the webinar, please feel free to ask us through the Q&A, not the chat, the Q&A, and we'll try to answer all your questions. So feel free to ask us whatever you like. I believe that most of the questions we're going to answer through the webinar. So I think we can start. Yaron, are you ready?
Yes, I'm ready, Ben.
So
It's Labor Day today.
it's Labor Day, right?
Yeah, so it's going to be this webinar. I'm doing a little bit spoiler, but we're going to have a very different webinar today and unique and very interesting one. And we have several deals, special deals for the Labor Day, right?
Yeah, we got some new sales for the Labor Day, and that we're gonna suggest to you. So you're gonna see them soon. And I think after I'll read the quick disclaimer, we can start our webinar. So I know first is a daily market forecast that help provide personal investment or financial advice to individual or act as a personal financial, legal, or institutional investment advisor, or individually advocate to purchase or sale of any of the security investment that use particular finance strategy. All investing stock forecasts and investment strategies include this risk of loss of some or even all your capital. Before pursuing any financial strategies discussed on this website, you should always consult with a licensed financial advisor. All right, we are ready. Let's start.
Okay. So I'm going to start with a quick introduction of INO first, the team, the technology, and our AI-powered solutions for the capital market. So INO first, we are an AI wealth tech company. Our main solution is a predictive algorithm that basically generates daily forecast for the capital market and identifies the most promising investment opportunities on a daily basis. We are utilizing artificial intelligence, more specifically machine learning, deep learning, artificial neural networks to predict the financial markets. The INO first predictive algorithm is generating daily forecasts for over 13,500 assets from different asset classes: equities, ETFs, commodities, currencies, cryptocurrencies, interest rates, and also world indices, with daily forecasts for multiple time frames: short term, mid term, and long term. This is a global solution. We are covering over 50 global stock exchanges, including the stock exchanges in the US, Europe, and Asia, basically most of the significant stock exchanges around the globe. And if we jump into a quick illustration of the algorithm capabilities, we are sharing here a almost live forecast. This is the forecast from the last Friday, the last trading day. This forecast was sent, this is the top 10 forecast that was sent to our clients before the market opening, around 5 a.m. Eastern time on Friday. In this forecast, you can see the assets that the algorithm picks that's relevant for the long position on the top part of this heat map. This is the short-term forecast, the 3 days forecast. You can see here 4 tickers that were picked by the algorithm for the long position, and also the tickers that the algorithm suggested to short sell or basically that's suitable for short positions. And on the right side, you can see the performance of those assets for both long and short. In addition, you can find the S&P 500 forecast, the daily S&P 500 forecast that the algorithm is basically generating on a daily basis. You can see that the forecast was positive. And what's interesting about that, you can see Friday was a very positive day. You can see that the algorithm managed to identify opportunities for both long and also short sell. If despite the positive market, the algorithm managed to identify also opportunities to short sell in this day. This is just illustration. I'm not suggesting to invest in any of those stocks. And in today's webinar, we are going to see some recent forecasts, but also some live forecasts. We are going to discuss and to talk a lot today about the ETF predictions that our algorithm is generating. Here you can find also the prediction, the 1 month forecast that the algorithm was generating, the 1 month ETF forecast that our algorithm was generating again on Friday before the market opening. On a daily basis, the algorithm screens the entire large ETF universe that basically we are ranking by using our technology on a daily basis. And you can see the ETFs that the algorithm identified for the next 1 month already on Friday. You can find here FAS, you can find here RWR, XHB, the home builders, RYR, FRESX, and you can see the performance of those ETFs versus the performance of the SPY, the ETF that representing the market, basically on Friday. Again, this is just an illustration. We are going to talk today about the different indicators that you see here. Ben is going to.
And I think that another interesting thing is that all the ETFs actually outperformed the SPY in this one day. We're talking about one day of trading. Yeah, this is a 1 month forecast. And we can see that also that the algorithm really likes the real estate sector that we're going to talk about it today. We can see 3 different real estate ETF related to the real estate RWR, FRESX, and the IYR. And it's interesting to see that on the first day, the 5 out of 5 of the ETFs just outperformed the market. It's a good start for this forecast.
Exactly. And it's a good start for the webinar as well. In terms of the team, the brain behind the algorithm is a unique R&D team that's being led by Dr. Lipa Reutemann from the Weizmann Institute of Science, one of the leading experts in the field of artificial intelligence, deep learning, machine learning, with over 23 years of experience. Dr. Reutemann is leading our R&D team, which includes PhDs, AI and machine learning experts. We have math professor from Tel Aviv University, as well as employees with the background of data science, computer science, math, statistics, and also different professionals from different fields. Ben Rubin, that is leading this webinar today, is the head of our advisory team. Ben used to work for one of the leading banks here in Israel. And besides Ben, we have also in our team engineers and capital market experts. As Ben said, my name is Yaron Golger. I'm the CEO and co-founder of Final First. I'm also lecturing at one of the leading universities in Israel. I'm the chairman of the Israeli Export Institute, specifically the FinTech board. I used to work for one of the leading consulting firms here in Israel. I'm an engineer with an MBA. So after this introduction, let's meet our clients. The I know first predictive algorithm is being trusted by the world's leading hedge funds, investment houses, banks, family offices, as well as high net worth individuals and retail clients from all over the world. Among this list, you can find leading hedge funds, leading family offices, leading investment houses, and one of the most interesting investment firms that actually working with us, Meitav, you can find it here, is the leading investment house in Israel, have launched recently the first AI power mutual fund that listed in the Tel Aviv Stock Exchange. It's available to the public, and we are really proud about this collaboration. We are going to talk about this interesting strategy in this webinar today. The clients that you see here are basically utilizing the predictive algorithm, the very same predictive algorithm, in order to identify opportunities in the market on a daily basis. And the algorithm that you're about to see has received several international awards, including from UBS, Entity Data from Japan, and also from the Geneva Wealth Tech Forum as the best international AI solution for the capital market. Here you can see several photos, and also the FinTech course, right? Ben is part of the lecturing team, and we are really proud about this collaboration and with the leading universities around the globe. In our website, you can find also links to several articles in leading and the coverage that we have received, that the AI algorithm has received in leading TV channels, leading magazines. In the website, you can find also client reviews that might help you to find a package that is relevant to you. And we hope to do it as well during this webinar. So how those clients, institutional and retail clients, are using this predictive algorithm? Basically, we are offering 2 solutions to our client. First, we are offering the I know first predictive algorithm as an advanced solution that helping every client to identify opportunities in the market on a daily basis. The algorithm is generating daily forecasts for the market, identifying the most promising investment opportunities, generating daily forecasts for the indices as well, and basically generating trading ideas to every client. Rather, it could be institutional one or retail one. So this is the solution that we are going to discuss and present today. The opportunity to identify investment ideas, opportunities in the market on a daily basis for the different timeframes, short-term, mid-term, and also long-term. On top of that, we have developed also systematic trading strategies that basically converting the daily prediction into a portfolio, managed portfolio. And during the recent year, we have launched several investment vehicles, like the mutual fund that I have described, with leading institutional players from all around the globe, and we are planning to continue to do so. The INO first predictive algorithm includes three components. By utilizing the first component, and we are going to also basically to discuss those three and present those three components in the webinar today. The first component assisting us to identify investment opportunities on a daily basis from any investment universe. It could be the S&P 500 universe, the Russell 1000, Russell 2000, specific sector, and specific industry as well. The second component, providing us stock market intelligence. We can identify leading sectors. We can identify sectors that we should avoid. We can receive daily prediction for the main indices, and we can identify promising regions across the globe. And the last component, the third one, is providing us daily customized prediction based on our portfolio. Basically, we are training the predictive algorithm based on each client portfolio, and we are providing this customized forecast for each client that would like to receive this customized solution on top of the investment ideas that the algorithm is identifying on a daily basis. So we basically recommending to combine all those three components when basically you're building your portfolio by utilizing the AI algorithm. So how we do it? Basically, the algorithm is collecting huge amounts of data that coming from the entire financial market. The algorithm is digesting information that coming from the equity, from different data sets that related to equities, data sets that are related to the interest rates, data sets that coming from the commodities market, data sets from the currencies market. We are combining, basically the algorithm is digesting on a daily basis huge amount of data. We are adding the daily data to our stock database. We are managing database with with over 15 years of historical data. We are combining the new data with the old data, and from this stage, the algorithm is basically building the complex network that existing in the financial market by utilizing our technology. Everything is connected. The interest rates to the equities, the different equities, the currencies to the commodities. We are building, by using our technology, the complex network that exists in the financial market, the hidden correlation set between the different assets. And before each trading day, the algorithm is generating the forecast that comes in the form of an heat map for the different time frames, short-term, mid-term, and also long-term. The algorithm is also learning from each forecast, and this is another input. The algorithm is learning from each successful forecast as a self-learning algorithm, and also from each unsuccessful forecast. And basically, this is the process that we are conducting on a daily basis in order to generate the predictions. In terms of the technology, we are combining different advanced AI approaches into one machine learning algorithms. The leading one is deep learning, artificial neural networks, genetic algorithms, reinforcement learning. And the most interesting thing about this predictive algorithm is the ability to separate and to focus on the most predictable assets from each investment universe. So if we are taking the S&P 500 universe as an example, on a daily basis, the algorithm is able to separate and to focus on the most predictable assets from the S&P from the Russell 2000 index or the Russell 1000 index. From each investment universe, the algorithm is able to focus on the most predictable assets and basically to filter out the assets that are not predictable, basically. So in terms of the product that the process that we are doing, we are taking all the assets from the US market. We are applying the different models that we are using, AI models. We are applying the predictability filter in order to focus on the most predictable assets. We are ranking all the assets based on the signal filter. We are going to talk about this indicator in this webinar. And we are identifying as a result, as an output, the best stocks, the top stock picks for each time frame. And we're going to see several examples again today during this webinar. Then,
all right, so how the forecast looks like. The forecast comes in the shape of a heat map, as you can see. Here you can see, for example, the 1 month time frame, one of the 6 time frames that we have in each and every forecast. The green cells represent long position, while the red cells represent short positions. And we actually can see with 2 indicators that help us to rank the entire investment universe. We are using the signal, which is the predicted movement of the asset. It's actually the potential movement of each and every asset. And it moves from minus infinity to infinity. And we can see it's actually ranking the forecast from the best signal or the highest signal that is in the top left corner and going to down to the right, up until down until the right bottom of the heat map, with which we can find the asset with the most strongest negative signal. This helps us again to rank the entire investment universe from the asset that's supposed to move to jump, like for example higher than the others, and we're using another indicator, this the predictability indicator, and it's actually help us to know how good the algorithm can read the specific assets, or how can it actually predict this specific asset. We can find it in the top left corner of each and every square. For example, here it's 0.3. It's actually Pearson correlation measurements, and it moves from -1 to 1. And for to make things easier, for example, 0.0 represents 50% probability that the asset will move to the predicted direction, while 1 represents 100% probability that the asset will move to the predicted direction. In both cases, we are looking for higher numbers from those 2 indicators. If it's the signal or the predictability, we always look for the highest numbers. Small tip, we're always suggesting giving more weight to the predictability. We first want the asset will move to the right direction, then we care less about the big movement that is predicted to each asset. So give more weight to the predictability filter. Again, the signal is in the center of the square, while the predictability is in the left, down left corner of each and every square. So every day you get the forecast to your email every morning before the trading start, of course. And you can see the entire time frames. All the time frames is in front of you. If it's 3 days, 7 days, 14 days, 1 month, 3 months, and 1 year. And you get the best stocks that the algorithm can find for a long position, and the best stocks for short or selling. You can see some of those stocks are repeating in a few time frames. It doesn't mean you have around the 100 new stocks that you have to follow. A lot of the stocks are in multiple time frame, and it's actually a good indicator for us to choose this specific stock. I'm going to talk about it later. Here we can find the top 20 forecast. It's a special forecast. All the top forecasts are special because they have, except from best stock to buy and stocks to short, we also added the S&P 500 index inside those forecasts. The top 10, top 5, top 20, top 40 forecasts are included, the S&P 500 index that can help us to know the direction of the market. So that's how the forecast looks like. Of course, just a technical note, to jump between the shorter time frames of the 3, 7, and 14 days, you can click on the button that is in the bottom of the forecast, and you can also, by clicking on the 1, 3, 12 month button, you can go to the long time forecast that is in the right side of the screen. So that's about that. And let's see some examples from the last month and even last weeks or last days from the algorithm. Here we can find, as we can see to the left, a forecast for a 3 days forecast that was generated on August 29, not long ago. And the algorithm picks the best 10 stocks to invest in for a period of 3 days. It means that we buy it now and holding that for 3 days. And some of you can even sell it after 1 day or 2 days, up to you. But this is a 3 days forecast, and we can find some different stocks from different universes. For example, SIF that jumped almost 31% in those 3 days. IMMP. We can see the result or the performance of those stocks to the right. In the bottom of this table, we can find the average of those 10 stocks. And we can see the S&P results in those, the S&P performance in those 3 days. So in this specific forecast, the INO First average was 4.39, while the S&P was around 1%. When you see those small X's next to the stock, it means that the algorithm it was wrong about those stocks and it went to the other direction. But as you can see, the majority of the stocks in this specific forecast went to the right direction, and the average was pretty good. And we can also see this specific forecast for 7 days. Here we can find stocks from different investment universe. If it's CLMT, that we can find it here, that come from oil and gas, or CLOV that is in the top part of this specific forecast and have the highest signal that come from the healthcare universe. You can see a diversity of universes in each and every forecast. Lumen that we're going to talk about it later is also in this specific forecast from the communication and telecom sector that is really hot right now. I'm going to talk about it in the end of the webinar and which sectors are the best to be in right now. So this specific forecast made 8% in average, while the S&P did 1.13 in a 1 week time frame. Again, this was generated on August 19, and it's a 7 days forecast. And we can see the signals that I talked about earlier in the center, each and every square, while the predictability is in the bottom left corner. Again, I would give more weight to the predictability filters, and then I will watch the signal. Here we can see a really strong signal of CLOV if we are comparing it to the other signal that is in this forecast. So we'll see some more examples of the signal and predictability right now. For example, in this specific forecast that was generated on August 12th, you can see the 14 days forecast. We can find different kind of stocks here with high predictability and high signals. For example, Lumen, as I said, Lumen Technologies, as I said earlier, that jumped by 10% in those 14 days. We can see APPS, UPST, Shopify, Under Armour. We can see a variety of stocks that the algorithm has actually identified as the best stocks to be in for the period of 14 days. Um, all the examples that we see here are kind of a passive examples, which means that we are buying those stocks on 12th of August and running them for 2 weeks, and we can see the result here to the right. Of course, you'll get the forecast on a daily basis, so you can be updated with the new stocks every day, or if some stocks has to change in the direction, something happened to the stock, if it has some reports or some news that change the direction of the fork of the stock, you will see that they are changing their color from green to red. So while you're subscribing to our service, you'll get the forecast on a daily basis, and you get the updated stocks every day. So this is the 2 weeks forecast, and now we're going to jump to the 1 month forecast. Here again, we can find different variety of the investment universe. We can find CBRE, the big real estate company that I really like this month. We can find the ZBRA, which is from the technology sector, DHI, Shopify again, and many others. Here, this specific, as you can see, it's the top 10 forecast because we have the S&P forecast as well. It's only in the top forecast that you can find the S&P index forecast added to the 10 stocks that the algorithm provided. In this specific case, we can see that while the S&P did almost 4%, the average of those stocks made 7.63%. And to whom of you that like to invest for longer time frames, as a 3 months or even 1 year, we also provide those forecasts for you. This is a forecast from May 30. It's a 3 months forecast. And again, we can find a variety of stocks here that made some really significant returns. If it's THC, the healthcare company, or NEO that we know, or MMM that made almost 40% in this forecast. It's interesting to see here THC. We can see that the predictability of the stock is almost 0.7. It's really a good predictability to this time frame. For 3 months, we're looking for 0.6 and higher predictability indicators. And also MMM, we can find 0.65, a high predictability. And if we are looking on those two stocks, we can find MMM moving almost by 40% when THC with 26%. So the predictability is playing a really significant part out of those two indicators. So again, give them more weight. And the 1 year, we can find the highest signal and highest predictability levels. We can see CVNA, for example, with almost 320% in 1 year, which is kind of crazy.
Amazing. Yeah, it's amazing.
We have coin, the Bitcoin-related stocks that moved 176%, CLSK as well with 166%. Of course, those stocks has more volatility and higher risk. But again, you can see that the average return is 78% in 1 year, which is kind of crazy, while the S&P just did 28%. So those were some examples from how the algorithm provide us the best stocks. And of course, he provided not only for the long position, and just also to the short position. And Yaron is going to talk about that.
Yeah. Quick remark about the examples that you have shared. You will notice that the longer the time frame is, the stronger the signals are. In terms of the signals that Ben just presented, you will notice that the 1 year signals are higher than the 3 months and the 1 month. So the longer the time frame, usually the assets have stronger signals, but also, and most importantly, the algorithm ability to predict those assets is basically stronger if you are utilizing the longer time frames. So you can remember that the range is between -1 and 1, as Ben mentioned. and you just compare the predictability indicators for the next 1 month, 3 months, and the 1 year, you will notice that the 1 month, 3 month, and 1 year numbers are much higher than the short-term ones. Therefore, whenever you're building a portfolio, you should utilize and start with the longer time frames. Now, besides the daily predictions that the algorithm is providing for assets that basically you should buy, the algorithm is also providing the daily forecast for the S&P as been mentioned, and also identifying some opportunities to short sell. In this example, you can find the daily predictions that the algorithm was generating basically last year on March 2023. And among the assets that you are finding here, you can find several assets that are coming from the banking sector, including Silicon Valley Bank, basically, that is part of this prediction, but also Signature Bank. We all know what happened to Signature in Silicon Valley after several days. And you can see that this prediction already came on February 19th. We had similar situation also in the COVID, during the COVID, when we started to see negative predictions for the market. Now, let's move to Ben?
Yeah, I want to talk about some stocks from the beginning of August, and some of you asked us in the chat about SMCI, if the algorithm predicted the big drop that it experienced. So SMCI, we can find it here in the red part of the table. This is the full table of the option package. The option package holds stocks that actually have a big option trade on them, and it's a more volatile kind of package, but it had some really interesting stocks in the beginning of the month. As we can see, LUMN, that was in the top of the forecast, and the stocks that a lot of people talk about it, that it's the new Nvidia, or the new trend in the AI universe. So the algorithm really liked the stock, and it's actually jumped by 71% in this month. We also have SAVA here, again with 31%, EXAS with 21%. And that's interesting to see that in the bottom of this forecast, we have ALXO, which has the strongest signal for short, with 122 signal for short, and that stocks actually dropped by 64% in 1 month. This is from August 2nd. This forecast was sent to our clients, the ones that get the option package. It's a really interesting package to whom of you that like high risk. And those results were really amazing, I think, in the last month.
Right. Another, by the way, another interesting stock that you can find here on the red side is SMCI, sorry, that fell by almost 30% over this month.
That's what that I said that in the beginning. They also asked us in the chat if we had a negative forecast of the SMCI. So it's right here in the red part of the table, as we can find it here. We saw it also in the shorter time frames. So to the one that asked it in the Q&A, here's your answer. I want to talk about August. We had a really interesting full of events in last August, and a lot of things happened. The market was pretty volatile, and we saw a lot of things happening. We can see here the S&P 500 universe. Actually the Max 7 was divided by Nvidia and Meta and Apple went up, Google, Amazon went down, Tesla was kind of close to zero. Microsoft as well. But we see a lot of stocks that jumped this month, as such as Netflix, Berkshire that almost got $4 trillion worth, LLY with their new injection that came into the market. So we have a lot of things happening. In the last webinar, I don't know how many people were here and participated in the last webinar. We talked about some in the end of the webinar. We are always giving the best sectors from the level 1 and level 2 to the next month. So this is what the algorithm suggested in the last webinar. And we can find here interesting sectors such as the telecommunication, the utilities, and the real estate, and the home builders. And you can see the returns in this month for those level 2 sectors. To whom that you don't know, the level 2 industries is 24 industries of the S&P 500. Here we can find telecom is leading the forecast for 1 month forecast, almost 8.5%. RWR as well with 5%, and the utilities with 6.16. In the red part, we can find the XOP, the oil and gas ETF, which went down by 4%. So the algorithm provide here, besides the long positions, also a short position to those of you that know how to short, of course, and know how to use the short. You have to be careful about it, of course, but it's possible on this forecast. So this was in the beginning of August. We also provided a level 1 forecast, and we saw from the beginning of the month, XLRE, the real estate, is one of the leading sectors. So is the communication, and that we can see their performance here. The third one was the XLV, that made some significant return, I mean, almost 4.5%, more than 4.5%, while the SPY from this specific universe made some 2.28% from August 5th. So we provided in the end of the webinar what are the best sectors to be in from the level 1 and the level 2 universe. And we're gonna do it as well in this webinar, so it's worth waiting till the end of this webinar while we will show you what the algorithm thinks about the next month. Also happened in this August, the Nikkei dropped almost more than 12%, and we actually saw that on our forecast. If we're opening the word indices forecast, which I really love, we could have find a few volatility indicators in the top of the table, which means that the volatility is supposed to get higher on those specific markets. This is the forecast from the August 1. You can see it here for the 1 month forecast. And one of the leading indicators was the VXN, which is the volatility in the NASDAQ index, also the VIX, the volatility in the S&P 500 index, and JNIV, which is the volatility in the Nikkei 225. So those three volatility indicators were in the top of the forecast on August 1. This could actually save you a lot of money, because if you were opening this forecast and you see that the volatility is jumping to the top of the table, which means volatility is supposed to get higher, it means that something can happen in the market, and you might be a little bit more cautious about your portfolio, maybe reduce the exposure to stocks and to indices. And by the way, in the red part of this forecast, we can find the Nikkei 225 in the bottom, which fits exactly to the JNIV and the volatility in the Nikkei. And we saw what happened to the Nikkei in the beginning of August. We saw a big drop, and we also felt it in the US market. Also, the S&P 500 dropped in more than almost 9%. Again, the volatility that was everybody talked about it later. By the way, we can see here a news from August 8th about how the volatility, how the VIX is in the sky more than 100% in August. So we could actually, the algorithm actually could maybe made you avoid this big drop that happened in August by warning you that the volatility is getting higher, and those volatility indicators and much other indices such as the S&P 500, home builders, banks, European markets, Eastern markets are all in the world indices forecast that is available in our package page.
Yeah, basically on this day, the volatility have reached all-time high to the level of 60. And it's very interesting to see, the volatility came from the technology sector, as you said, specifically from the NASDAQ, the volatility that we have seen from Nvidia, SMCI, and other technology stocks. And despite the thing that we had a positive month, we can see that it was a volatile one as well.
Yeah, one of those. We actually saw that it was one of the volatile months in the markets this year. Of course, our queen Nvidia that everybody's talked about this month, not just the big drop she had, also the earnings that all the market waited for. And actually, Nvidia become one of the more important stocks in the world, as we can see in those two items. But also, we experienced the big drop by 24% from August 5th. From the beginning of August up until the August 5th, and the algorithm also saw that drop. Again, we can find it in the Max 7 forecast from the August 1st. We're seeing Nvidia in the bottom of this Mag 7 forecast. So also the algorithm provided us some warnings about this big drop that occurred on the beginning of August. Another stock that the algorithm has actually provided a really good forecast on is Shopify. In the beginning of August, 31 of July, we can find it to the left. Shopify was in the top of the forecast. We can see it here in the left top corner with the highest signal with a good predictability of 0.52. Again, 0.5 predictability doesn't mean 50% probability. It means that we have more than around 75% probability that the asset will move to the predicted direction, which means if it's green, it's supposed to go up. If it's red, it's supposed to go down. Again, the signals gives us the strength of the movement, of the predictive movement of this specific stock. And those two indicators give us a really good long position on this Shopify stock. And we can see that actually the stock went down right after the forecast came. This is a 1 month forecast, but in the end of this month, Shopify made 23% and really good performance in the 1 month forecast. Another stock that I really like, CBRE. And why do I like it? Because when I show you earlier, the best sector to be in, but that we talked about in the last webinar was real estate. And CBRE is one of the biggest real estate companies that was traded here. So if I have a good sector that the algorithm is pointing at, like being in the real estate world or the real estate sector, and I'm seeing that the first stocks in the stocks forecast is a real estate stock, that's complete the entire picture. And I really like to be in holding stocks that are related to a good sector that the algorithm is providing. So CBRE After, actually, we can find it in the 26th of July. It went up. There's a big gap up. And still, after the algorithm gave it a really green forecast and really good forecast, and the stocks keep on going with 7.5% in 1 month. It's a good, really good forecast. Although the stocks went up, still the algorithm can read that. He knows that the stock went up. So don't be afraid to get into stocks that making changes. So this is CBRE, the real estate stock. Another example from the ETF Universe. Again, ETF package, I think, is one of the most interesting package. I'm going to talk about it more in this webinar. But it's providing us different ETFs from the US market, and not just giving us a variety of ETF from the US market. We also have it in the worldwide and geographical suggestions or things that we can buy, ETFs that we can buy. For example, in this specific forecast that was generated on August 16, we can see it here, for 14 days, we have a few ETF. The one of them, and one, let's say the one with the highest predictability, again, predictability indicator. I keep repeating it because it's important. One of the most highest predictability levels here was from FAS. FAS is the financial sector. It's leveraged by three, as we can see here. That's the name of this ETF. Also here we can find TQQQ, that leveraged by three. And FAS made some more than 16% in a 2 weeks time period, with a good signal, good predictability level. And this ETF worked pretty good from the algorithm suggestions. We can find here some other ETFs such as technology, real estate, Latin America, and others, and other ETFs that we have. And actually buying an ETF, it's a pretty good idea if you like to diverse, of course, your investments and not just put all your money on one stock. In each and one of these ETFs has more than 40 stocks in it, probably between 40 to 70 stocks. So you get a really good diversifications in the ETF. It's lower your costs. Generally, it's cheaper to buy an ETF than stocks, than single stock. It's usually really tradable because there's a lot of traffic on those ETF. We have tax efficiency about it, and it gives you dividend, by the way. I mean, you're buying the ETF and you get dividend. So this is one of the biggest advantage of the ETF. And accessibility, of course. For example, if we take the Bitcoin universe that you cannot really trade in the US market generally. Now you can buy it through the ETF or follow it by ETF, or some different or geographical places that you want to follow, such as India or the Brazilian market. You can do it through an ETF. So this tool has a lot of advantages, and one of our popular package is the ETF forecast, and we're gonna talk about it right now. And if we'll take an example again from the last month, August, we saw a really volatile market in August. This is the ETF forecast that sent to our clients on August 1st, before the trading day. And you can see the results of those ETFs to the right. We know that the S&P did around 3% in August. So the majority of the ETF here actually outperformed the S&P. And we can find there interesting ETFs, such as the banks ETF that follows the US banks. We have the gold miners. We have home builders, which is a really interesting sector that we saw that is in this year and even in the 2023. It was really successful sector. We can find the Russell 2000, for example, instead of buying or you can buy the index itself by just buying the ETF. If you want to invest in small cap, give more weight to small cap in your portfolio, you can do it as well. Healthcare, real estate, and the biotechnology, you can find everything in the ETF package. I really like this package, and I like even more to combine it with a stock package. And I actually made you a quick example of how it's going to work. This is two forecasts. It's a long term forecast. The 1 month ETF forecast. We can find again the banks, the home builders, 10. The solar sector, and the real estate sector again here, and even the 1 year, holding the ETF for a period of 1 year, such as the XLK, the technology, home builders, again, Russell, consumer, really diverse universe that you can choose from. So I decided to actually build an AI-based portfolio and actually tell you how you can build it yourself by holding just two packages from our packages page and from the sales that we're gonna represent you in a minute. But in this case, I opened. Let's pretend that we are in August 1st, and I want to buy to build a portfolio. My risk, let's say, is somewhere in the middle between medium risk to high risk. So I'm taking in this specific universe, 50% of my portfolio is going to be combined by two ETF assets. I would buy two ETF with 25% each to my portfolio, and I'm gonna buy 5 stocks in 10% each from the top 10 package. Again, you can find here, this is the true forecast that was sent to our clients. This is the ETF package. I would buy, in this case, XHB and FAS. Why? Because they have the high predictability level, and they have high signals. So I want to focus on those two. And from the stocks level, and from the top 10 package, I would choose those 5 because, again, they have the highest predictability and the highest signal in this specific package. So again, I'm building a portfolio just by choosing 2 ETF, 25% each, and 5 stocks, 10% each out of my portfolio, and combine it into one portfolio. And let me show you what happened from the beginning of August up until the 30th of August. You can see those 5 stocks in blue. You can see the returns, and you can see the portfolio that I combined and I made more than 10%. And of course, I'm always comparing it to the S&P. And I can see that the S&P made 3.78%, almost 3 times higher than the S&P. Really easy to handle, just picking the best predictability, best signal from 2 packages. One of the ETF, one is the stocks package. You can choose any stock package. It can be the top 10 package that we talked about. It can be the S&P 500, for example, stocks that we have packaged. And even combining, if you're seeing, for example, a lot of, as we saw earlier, a lot of real estate companies a lot of real estate sectors that we can find in the ETF level. You can choose stocks that are related to the real estate, for example, CBRE, as we talked earlier, or DHI, if it's from the home builder, if I'm not mistaken.
Yes.
If we had some technology sector that was in the first row, I would buy Shopify, or choosing stock that related to this specific sector, because I like to be in a good sector and holding stocks that related to this sector. So building an AI-based portfolio is pretty easy. You just have to combine an ETF package or indices package that we have with the top 10 package or S&P 500 package or the Russell 1000 package as well. One of the big stocks package that we provide you. And it's really easy to build it. Of course, if you want to make your risk lower, so you can make the ETF, you can buy like 3 or 4 ETF and make it 70% out of your portfolio and reduce the stocks level to 20% or 10%. And by that, reducing the risk level of combining ETF and stocks. And this is actually one of the strategies that we are building for our clients. I will show you show it later on in the webinar. But I think the results were pretty awesome for a really volatile month. Let's not forget that August was pretty hard to handle. And just by holding those assets, I made 10% in my portfolio.
Yeah, the beauty here is that in this tiered portfolio, you have both opportunities, but also risk management. You are limiting your risk. It's very nice.
Yeah, exactly. And to build this portfolio, we offered you a few Labor Day sales. The first one is a 10% coupon discount on any package on our package page. This page, you can find it through our website, and I will also put it in our chat that you can. I'll put the link in the chat that you can see it and see all the packages in our page. You have a 10% discount. You just choose your package. You put the code, the coupon labor24, and you get a 10% discount. Don't forget to put the coupon labor24. And this, of course, sale is for the next 24 hours. So act quickly on this specific sale. Our second sale, which I think is really interesting, is the 1+1. You choose 2 packages for $299 per month. You can do what I just showed you earlier by choosing the ETF package with the top 10 package. You have no commitment. You can cancel it every month on this specific sale. I think it's an awesome sale for the next 24 hours. You have to be quick about it too. I will put the link for this specific sale in the chat right now, but you can get it again through our website. So this is the 1+1 package. You choose one and then you get one for free. 2 packages for $299 a month. I think it's a really, really interesting package. And the third sale that we have, it's a 6-month subscription deal. You get to choose 2 packages for $269, and you get the ETF package for free. The ETF package that I talked about earlier, you get it for free for a period of 6 months. And again, here you can choose the ETF package. If you're getting the ETF package, you can choose 2 other stocks package, for example, the top 10 or the Russell 1000, and you can choose stocks from those universe and combine it with the ETF package and build your portfolio. And again, it's a 6-month subscription for 2 packages that you get for $269, and you get the ETF package for free. And I will put the link to this specific sale in the chat in 1 second.
Yeah, the beauty with the third deal is that with the second one and the third one is that you can change the combination, the 2 packages every month. Just send us an email on the beginning of each month, and you can change those 2 selections on every month basically, and you will keep receiving the ETF package during the entire 6-month period.
Exactly. So I put the 3 links in the chat. You can check it and see that sale that is good for you. I quickly repeat it. The Labor Day First sale is 10% discount with the coupon that's called Labor 24. The second sale is 1+1 in $299. And you get 2 packages to choose from, and for $299 a month. Of course, no commitment. You can cancel anytime. And our third Labor Day sale is the 6-month subscription for $269. You get 2 packages, and you get the ETF package for free. All the links are in the chat, and you can find it also in our website.
Right, it's already live on the website as well for the next 24 hours.
Exactly. So you have to be quick about it. It's for the 24 hours. All right, let's talk a little bit about our artificial intelligence strategies and about institutional clients that we also provide our forecast service for them as well. And we have a few interesting strategies that we generated. But before I talked about the level 1 and level 2, if you remember the Geeks level 1 and Geeks level 2, it's actually the Geeks level 1, it's the 11 main sectors in the S&P 500 universe. You can find it here: the information technology, consumer, healthcare, energy, utilities, industrial, financial. And we have also 24 industries that you can find it here beneath those 11 sectors, such as semiconductors, insurance, banks, consumer services, and entertainment. So the S&P universe is divided to Geeks level 1, which is the 11 main sectors, and the Geeks level 2, which is the 24 industries. And with those, we are building a few strategies. The strategies that I'm going to present today, it's the combined strategy, and it's actually combining the level 1, the level 2, and stocks from the S&P 500 universe. All the stocks that are in those strategies are taken from the S&P 500 universe only. So we have different kind of strategies. If it's the combined strategy, if it's the long only sector strategy that I'm going to show you today as well. But we also have a long short strategy on the SPY or taking profit that fits more to hedge funds, and a low risk strategy that's focusing on low drawdowns. And I'm going to explain what is the specific strategy. The combined strategy here, it's actually a little bit similar to what that I explained earlier about building a AI portfolio, just more advanced, because here we have 4 tiers. The first tier is to choose the best 3L1 sector. The second tier is giving 10% to the 2 industries, best industries. And the tier 3 is actually focusing on the 5 most predictable stocks. And the fourth tier is choosing the S&P 500 or the S&P 100. It's based on a few things that we get from the algorithm on a monthly basis. If we have to put some more focus on the bigger stocks, or actually choose the entire market with the SPY. While we are shorting, we're doing this exact same thing, just by short. And this strategy gave us 368% from 2020, January 2020, up until July 2024. We can see that the S&P return was 61%. The blue line represent the strategy, while the red, the orange one represent the S&P 500 performance. We can see here each and every year what was the performance of the algorithm compared to the S&P. You can also see it here by the charts that in I think all of the years we actually outperformed the market pretty consistently. I also provided a quick snapshot from a live portfolio that we are running for one of our clients, one of our institutional clients. The strategy was rebalanced on the 21st of August, and right now it's with 1.2% on the S&P that has just made 0.49%. We can see the best sector to be in. that the algorithm chose, and we can see the best 5 stocks to be in. We can find in Hamad, Blackstone, QRVO, and their performance in since the 21 of August. The next rebalance is going to happen on September 18. So there's just a little taste of how we run our strategy. Another strategy that we are providing to our institutional clients is the sector strategy. In this specific strategy, we are focusing and doing long only strategy just on the best level 1 sectors. This one performed 102% in the last 4 years. And we can see here out the 11 sectors, this table, we can see the geeks level 1, 11 sectors, and the one that are colored yellow is the one that the algorithm chooses to be in each and every rebalance. Here we can find the rebalance date. The rebalance is made once a month, and the algorithm chooses the best 3 sectors to be in, and we give it 25% for each sectors, and the rest we fill with S&P, the SPY. And here we can see the returns of the portfolio compared to the S&P, and you can see the diversity that the algorithm knows how to be in the best sector in each and every rebalance. It's actually 41 out of the 57 rebalances. He chooses to be in one or more sector out of the best 3 sector in this industry. This is a really remarkable data that the algorithm knows to choose the best sectors to be in each and every rebalance. And this also actually happened in the ETF package and in the indices package. In those packages, the algorithm also choose the best sector to be in, so you can build your own AI investment strategy by yourself or a portfolio by yourself, as I told you how earlier. And the last strategy is actually sold to one of the leading investment houses in Israel, Meitav. It's a long only strategy that also combined sectors and 40 stocks out of the S&P 500. And this specific strategy is actually leading the performance in the last 3 months. We are in the first place out of all of the Israelis funds that you can see here. Here, I don't know if you can see it, but this is the last rebalance from August 21 again. I'll try to focus on it. But the portfolio return was 2.73, while the S&P did 0.7. And here we can find the 40 stocks that the algorithm has provided us to be in. And you can see diversity of stocks from healthcare to technology to real estate and to financial, a lot of financial stocks. And so this is a strategy that we are really proud in, and it was sold to one of the leading houses in Meitav and in Israel, sorry. And we are actually going to launch another fund soon that actually focus on level 1 sectors, but you didn't hear that from me. So if some of you are institutional clients in the webinar, please get to us by my mail if it's a BNR, iknowfirst.com, or doing it by our website. We'll be happy to provide you a strategy that fits to you.
Someone asked about cryptos today, and I saw it in the chat. By the way, we are going to address all the questions that you're asking in the Q&A, so feel free to use it, as Ben said. One of the most interesting in asset classes, we can call it already asset class, right, Ben? Is the cryptocurrency asset class. For this asset class, this volatile asset class, usually you don't finding decent research. There is no earnings, so you cannot analyze the real value of each cryptocurrency. And what's interesting about our predictive algorithm that we are providing the very same prediction that you have seen for the equities or the ETF side, also for the cryptocurrency side. Every day, the algorithm is providing daily forecast for over 200 cryptocurrencies and generating the ranking that you see right here. Here you can find some recent short-term examples. On the left side, 3 days forecast with several several cryptocurrencies that the algorithm predicted pretty well, I would say. On the right side, you can find a long-term, 1-year cryptocurrencies prediction. Just think about all the things and all the volatility that we have seen in the cryptocurrencies market over the last year. Right here, you can find buy and hold portfolio for the cryptocurrencies, pretty unique. And you can find here the different assets that the algorithm predicted.
Yeah, and we have different kind of packages, as we saw earlier. This is the world indices package. In this package, you don't get just 10 assets. Actually, you get more than 75 indices and sectors that are leading worldwide. You can find there, of course, the volatility, the S&P 500, the Russell, the NASDAQ 100. Oil services, housing sectors, small cap, mid cap, a lot of indices around the globe in this interesting forecast, the world indices. We also have fixed income packages, commodities package, to whom that like to trade on commodities, currencies forecast. Over 80 currencies around the globe that we provide on a daily basis. And of course, as Yaron said in the beginning, different stock exchanges around the globe, if it's the Canadian Stock Exchange, European stocks, the UK, Japan, Italy, the Australian market, Hong Kong, really a lot of market, the Chinese market is provided, and also the Indian market. Which we actually have a big collaboration with some of the leading brokerage firm in India, Finvazia. We actually are providing a daily forecast to more than 400,000 clients on a daily basis from the Indian market. This is how it looks in the desktop and in the mobile. They actually can see and locate. The algorithm is providing the best opportunities from the Indian market, and so that's a thing that we are really proud of. All right, let's see what we talked about in the last webinar. Again, we talked about this is the world indices forecast. Again, you can see multiple indices and sectors that are appearing in this specific forecast. And the leading one was the VIX with the highest signal. And that was from the beginning of August. And we can see that big jump of the VIX that we talked about earlier. And then coming back down to more of lower levels. But the algorithm has provided a really good warning for that volatility to come. Also, we talked about the Max 7, and we saw that most of those stocks were colored red at the beginning of August. And we can see their performance during August really, really bad in the 7 days time frame. Those Max 7 performed quite badly in the beginning of August, so that could save you a lot of money, and maybe you can maybe sell some of your Nvidia stocks or your Google stock in this short time period. To whom of you are traders and doing a lot of actions and trading on a daily basis. And now we're going to talk about the future. We're going to talk about what the algorithm think about the next month, what are the best sectors and industries. So let's jump into it. The forecast for next month from the geeks level 1. The real estate is still the leading sector right now in the level 1. We can find again, please pay attention to the predictability level. We can see that XLC, which is the communication sector, has a good predictability. And you can also see the healthcare and the utilities are in the leading sectors for this month. The energy is green, the XLE, but it's in the bottom of the forecast. And if we are looking at the level 2 industries, we can find the telecommunication, which is also as XLC, the same universe. We can find here the regional banks in the US. We can find the XHE, which is the healthcare equipment. And we can find the home builder and semiconductors back in the lead. RWR is real estate as well. So if the level 1 gives us like the main sectors to be in, we can find that the level 2 is giving us what's the best industries and subsectors that we should focus on. So XLC communication is XTL. We can find XLRE, we can find it XHB and RWR that's related to the real estate sector. And of course, with the XLV, which is the healthcare, we can find XHE, which is the healthcare equipment. So we can focus on the best sector. So that's the best sectors for the next month. Do a screenshot of the screen and save it for the next month. And let's see in the indices forecast what's going to happen. We're seeing here the regional banks in the US are quite strong and have the highest signal, and so is the networking. The NWX also looks quite strong. We can find the real estate, RMZ, BKX. Again, it's the banks, the NASDAQ banks. That looks good. Housing sector also still, as we talked about XHB, housing sector looks pretty good. We can find the DAX here as well. Dow Jones Utilities and the Brazilian market we can find here. BVSP is looking quite strong. S&P is positive for the next month. We can find it here. So as the Russell 3000 also, and the Dow Jones are positive and in the green side of the table, not in the head, but not in the top of the table, but a good place in the middle. And in the red part of the forecast, I cut it into 2 pieces because it's too long. You can find the VIX and the VXN, which means the volatility is going to be lower this month. We can find also the volatility in Japan. FVX, it's the 5-year interest rate bonds, US government bonds. We see it also red. XAL, it's the airlines company that also look quite negative this month. Oil services and China, the Chinese market also, we can find it here, looks quite negative with the Taiwan equal weight index that also look a little bit negative. The Nikkei, we can find it between the red and in the green zone. Not something that I would sell or short, but not something that I would buy as well. So this is the picture for the market. The market looks quite positive. We're seeing a lot of financial stocks and networking. Real estate looks pretty strong. Small cap, by the way, SPCY, it's the S&P 600 small cap. It means that like the rest of the stocks are joining the market. I think that we're going to see again a lot of stocks that are going up this month, from the maybe a little bit mid cap or small cap as well. But basically, the forecast look quite positive. You can find here again S&P 500 is one in the green part of the forecast. Yaron,
We
anything
do,
else that you want to add?
just a quick remark. We do suggest to verify this prediction on a daily basis with the daily predictions that you are receiving on a daily basis before the market opening. So make sure that you still see this red to green ratio, that the leading indices are still on the top. Even if you are subscribing to a stock picking packages, still you can verify this prediction by analyzing the ratio between the green cells and the red cells, and also the S&P 500 predictions that is part of each top 20, top 10, or top 40 prediction.
Yep, and I'm gonna quickly repeat our special Labor Day sale. The first one is 10% coupon discount. Just choose your package in the package page that I put in the chat. You just type Labor 24 in the coupon area, and you get the 10% discount for all the packages there. The second Labor Day sale is 1+1. You buy one and get one for $299 per month. No commitment. You can cancel it every time. And of course, you can choose and switch every month the packages. And that's the sale that we talk about. You can buy a different kind of packages together. And the third sale is the 6-month subscription for $269 per month. While you get two packages, you get to choose two packages and to get the ETF package for free. And that's what we talk about, just building a portfolio that is combined from ETF and stocks. You can do it by choosing this webinar and the Labor Day sale. So all those link to those three sales are in the chat. So you can get it in the next 24 hours. You can also get it by logging into our website, iKnowFirst.com, and you will see those three sales as well.
Yes, quick question from the crowd. Some questions. Ben, what is your preferred packages for the 1+1 deal? If you
I
are
think
receiving the ETF package for free, what are your?
Yeah, I think I made myself quite obvious here with the ETF package today. One of my favorite packages is the ETF package. Combining it with the top 10 or the S&P 500 could be awesome and could work pretty good by locating and finding good stocks, because they have like two opinions. They have two things that are advising me to take these specific stocks or ETF. So I like to combine those two. And again, you have a lot of variety to choose from. You get semiconductors package, you got the technology package, you have consumer package, you have retail, you have really a lot of packages to choose from. Banks that we saw that are also look quite good. Real estate also look quite strong. So combining those packages with indices package or ETF package, I think it's a winning combination.
Right. And my two packages for the next month is if I'm taking this 6 months deal, is the top 10 stock picks and the top S&P 500 stock picks, along, of course, with the ETF packages that I'm going to receive for free, basically.
Yeah. Sounds good. And I think it's time to answer the questions.
Okay. What broker do you recommend? You can utilize our predictive algorithm with your bank account or with any broker. You can choose your own broker and utilize our predictions with your own personal account. Is 0.3 is 30% predictability?
No, again, the predictability level is in Pearson correlation measurements. It moves from, let's say, 0 to 1, while 0 represents 50% probability, 1 represents 100%. So 0.3 in that case is around 63%, 64% probability. And of course, you have in the website an explanation, videos about the signal and the predictability that you can watch again. But again, giving more weight to predictability is it's, I think it's more of the best, let's say the best indicator out of the two. I would give more weight to the predictability indicator.
Is the data available as a CSV or XLS format? Yes, we are sending the prediction in an XLS format. So every day when you turning on your computer in the morning, there is a live, recent and fresh prediction that you are going to receive with the best opportunities, the top stock picks, top ETF picks that the algorithm identified today. It's updated on a daily basis. Every day you are going to receive the best opportunities for the short term, mid-term, and also the long term. And I'm strongly suggesting to utilize the tips that Ben gave you today. You guys received some institutional tips here today. So I do suggest to take advantage of those tips. Do you offer intraday service? We are not offering intraday service. However, you can use or utilize the short-term predictions also for intraday service. It's important for us to say that intraday's trading is, of course, is more involved with much higher risk, I would say. Do you have Bitcoin forecast? Yes. Ethereum forecast? Yes. I believe that I have answered that as well. And any other question? I think we answered most of the questions today.
Yeah, I think so. And we gave, I think, a nice look at the market, a good look of what's going to happen. Right now, the market looks in a risk on. We focused on the good sectors to be in. We saw some interesting indices to be in. So I think we are ready for September. And of course, we have to thank everybody that came and stay with us 1.5 hours. Wow, a long webinar. And thank you very much. And we'll see you guys in the next webinar.
Thank you, Ben, for a fascinating webinar. Thank you, guys. It was fun. Okay.
Bye.
Have a good day. Happy Labor Day.